Looking at the Markets with David Modell. Welcome to Looking at the Markets with David Modell. Today I'm going to be speaking to my special guest, Mr. Daniel Ameduri. Mr. Ameduri has been in the financial industry for a long time, and he is at futuremoneytrends with an S.com, and we'll be talking about that today. And Mr. Ameduri is an expert in stocks, commodities, markets, and everything finance, or at least almost everything finance. So, Mr. Ameduri, thank you so much for joining me today on Looking at the Markets.
Looking forward to the show.
Yeah, well, I'm looking forward to this as well. So, I just want to start at the beginning, just to get a feel for your background. If you could tell me how you first got started in finance and investing.
It goes back to when I was a child. I was always had the entrepreneurial spirit, and even going back to kindergarten, I would get in trouble at school for underselling a teacher on pencils, and I would get in trouble from my mom for emptying out the garage and going door to door to try to sell things.
Right.
And then as a teenager, I started reading a lot of books. Would enjoy reading anything about personal finance at Barnes & Noble or Borders bookstore. And then I got lucky. I ran into a mentor by chance, and he was somebody who was a very successful real estate investor and a business builder. And that's where I started to learn more and more about it, and I really hit the ground running as far as my adult career in finance. I purchased my first rental property about 3 or 4 months out of high school and never looked back. I just kept buying properties. I did invest in the stock market early on, and also when I was 16, actually, to go back before I was even officially an adult, I had made a small investment to become part owner in a gym. So this is always something that I was fascinated with and just thoroughly enjoyed.
Yeah, that's a great start. And moving ahead a little bit, I've read on your website, futuremoneytrends.com, which the link is going to be in the description. Everybody should check that out. You've had a YouTube channel for a long time, very popular, and back in 2007, you were warning people about a coming market and mortgage collapse. And of course, we all know what happened in 2008. So that was, that was really, you were ahead of your time. And are you seeing some of those same signs now in this seemingly toppy market?
Yeah, I do see a lot of the same signs and a lot of the big issues. However, the Fed and central planners globally have been able to extend and pretend this thing a lot longer than I think anybody thought they could have. So though I'm not actively betting against the markets yet, I would say I would be putting on a proceed with caution, because we are in the everything bubble, essentially, where if you look at the stock market, you look at the bond market, and you look at the housing market, that's incredible. I don't know if we've ever been in a situation like this where all three are at extremes.
Yeah.
Whether that's the housing bubble hasn't been this high since 2006 relative to income. Stock market hasn't been this high relative to the values of the companies and the yields, the PE ratios, real PE ratios since 2006, 2007. And then the bond market, of course, is just it's literally rates have nowhere to go but up. So this thing has been running for 36, 37 years, and many have crashed and burned trying to calling a top on this thing.
Right.
So it could go another 10 years, but certainly there's no sustainability to almost any of these markets.
I ask a lot of people that I interview, if you're, hypothetically speaking, if your elderly grandparents asked you whether they should put their money into a 60-40 split of SPY and TLT and just leave it there, would you recommend that?
I wouldn't recommend that for anybody who's a senior citizen, just because they might need their money in the next 5 to 10 years, and there's a good chance that both of those have some systemic risk, some significant volatility. They might both do well, but the volatility that could happen. So I wouldn't recommend those for any old people, to be perfectly honest with you. Now, to flip that around completely, would I recommend the S&P 500 to a child? Sure, why not? Because here's the thing, even if they bought it overvalued, I'm not going to try to pretend that anyone can successfully time these things. And when it comes down to it, if I'm saving for a 5-year-old or a 7-year-old, which is very relevant for me because that's exactly how old 2 of my kids are, but the other one's 3, would you rather have a cash account or bonds for the child, or a gold bar, or would you rather have them have ownership in a company like Google, Apple, Chipotle? I mean, these things are not really value plays at all. But my point is that I would rather own a company. I would rather own shares of a company like Coca-Cola than shares of a bankrupted institution, which is what happens when you own the U.S. Federal Reserve note. You simply have a currency that is actively being defaulted on through inflation and could one day be absolutely defaulted on. Unlikely, but it could be. And if it's not, it's going to just there'll be a further default through inflation or negative interest rates, which are an absolute default when you're paying back the lender less. That is a default by definition. So that would be the only people I'd recommend the S&P 500 to.
Want to talk about futuremoneytrends.com? I'm seeing so much amazing free content on here. I see articles, I see videos, reports, all kinds of great stuff. What are the services you offer at Future Money Trends?
Future Money Trends, we offer it's a personal finance digest. So you basically get a lot of wealth ideas on how to grow your income, how to position yourself for the new economy, because we do see our economy in transition. We do believe we're in a technical depressionary phase of the economy, and it's a restructuring. I don't know if it ends with a big crash or if it just transitions smoothly. I don't know, but either way, I know it's changing. The 1980s portfolio model is dead. The 1960s model of go to college and get a job, that's long gone. So we're trying to prepare for the future, completely letting go of the past. And we also offer about 1 to 2 times a month specific stock suggestions in the microcap space. We only recommend this as less than 10% of your portfolio. These are speculations, so they're high risk. However, it's something that we're using in addition to having a safe portfolio of income and wealth-preserving assets. We also want to have a few things that could potentially leapfrog our net worths higher and our net liquid assets much higher.
Now I want to talk about hedging risk here. You did allude to the possibility of a market a market pullback, which wouldn't be unreasonable. But how should people be hedging? Can we just ride out a market drawdown, or should we be using other means?
I think the safest way to hedge against the stock market is to have a healthy cash position. Because if the stock market goes down and you have the cash to purchase a cheap share of a company you want, whether it's a gold company or a beer company or whatever, it doesn't matter. Cash is probably the first hedge that people should have, a healthy amount of cash. Now, you could even be going into the bigger picture. Well, how do you hedge yourself against cash? And I think ultimately the true hedge, the true crisis hedge, the ultimate hedge on any financial asset is going to be physical gold. Yeah. And so you'll always want to start. When you think about hedging, you want to hedge for everything. You buy gold. It's an insurance that you hope never pays out. Because if gold goes to $15,000 or $50,000 like some people forecast, it's going to be very unfortunate for all of us, because you're talking about a changed America forever. We could be in a banana republic state. We could be in a situation where there's disruptions, civil chaos. So look, it's one of those things like, hey, I own fire insurance, but I don't want my house to burn down. Yeah. So I own gold, but I don't necessarily want gold. Of course, I think gold fundamentally is in a bull market, and it will go to $2,000 or $3,000 in the next 5-6 years. But I also don't want to see it really pay out as that crisis hedge. So that's the first hedge, is gold. I think you should have a healthy position of cash. Now, when you get into other things like shorting markets or buying puts or buying the ETFs, I wouldn't recommend that for people. Unless you're a sophisticated trader, you're probably just going to lose money doing that. I enjoy sometimes when I buy, let's say, a gold mining stock, an individual stock, I might buy the ETF that is short the sector, because my individual stock it'll beat the index by 3 to 5 times if it's a high quality one. But at the same point in time, when it goes down, I can make money from a short ETF. So that's something that would be very basic if somebody wanted to do. But look, ideally, cash, gold, that's a great hedge. And of course, the ultimate, another ultimate hedge, I guess, is just not getting yourself involved in things you don't understand. But you don't have to be in anything.
Right. Cash is king. And there's nothing wrong. Cash is a position. I always tell people that. And waiting. This game is won by the person who's the most patient. That's how I look at it. And so there's nothing wrong with holding cash. Now, as far as gold and silver, if I may ask a personal question, are you a stacker yourself, or do you go for the ETFs?
No, I do prefer physical metal. Now, it doesn't necessarily mean I need it delivered to my home. So I like vault storage. I think you should diversify it. I think you should have some in a neighboring country. I think you should have some in a few friendly gold and silver states, which now offer vault storage. And I also think you should pick a place like Switzerland. And there's different places. Some of them, like in Switzerland, you have to have some pretty large minimums. But in other places like Canada and certain parts of the U.S., you can have very low minimums. And there's also other sites now like the Gold Money site, BitGold, or whatever it is. There's different options now. So I prefer making sure the metal, you have it physically rather than the GLD. If you're going to own the GLD, then that's a trade. I don't really need it as a trade. I'm using it for insurance.
So I wanted to talk about a super hot topic now, of course, cryptocurrencies, Bitcoin. Personally, I put out a video about a week and a half ago telling people that, and of course, this is not investment advice that we're giving in this video. It's not a recommendation to buy or sell anything. But I told people about a week and a half ago that I am not buying Bitcoin. I'm not buying cryptocurrency. And since then, Bitcoin has gone down substantially after a massive run-up. What is your view on cryptocurrency investing for the long term?
Well, for the long term, I think it's speculative, and we profiled Bitcoin at $13 in 2012, and we said that it could go to 50,000 by 2020, and it could go to 1 million by 2025, or it could go to 0. Yeah. That's an exact quote. And I literally just put an email out, I believe on Saturday or Sunday, and I said that exact same thing. I said, look, this thing could go to 0. It could go to 100,000. I don't know where it's going. So I do own some Bitcoin. I certainly wouldn't, be very, people should not be entering into a position when it's at a euphoric state, when everybody's very excited. But one thing I can say about the cryptocurrencies is there's a real economy that's growing out there. And this is in 2012 when I went to a conference. That's when I walked away realizing that this was bigger than just a speculative crapshoot. This wasn't just a gamble. There was something in this because there were very, very smart entrepreneurs, very smart people in there building an economy so people could spend these things and people could use these things. Still very early though. So look, every penny you put into that, everyone should expect that you could lose it all. You could lose it all. So don't put a single dime in it unless you're willing to take that kind of risk, because this is extreme speculation. Now, it could work out for everybody, and I wish everybody the best. But just be slow. To be perfectly honest with you, I would disclose that I buy Bitcoin and I buy Ethereum every single day. Now it's a very small amount, but I have it set up to buys it every single day. And actually, it's kind of a lazy thing I do because I don't really stare at the screen at tickers and stuff. But what I do it for is because I like getting hit with the message every day, and it kind of reminds me to if there's a big crash, if let's say it went to $1,000, I would be a buyer of Bitcoin for my personal portfolio. Now my speculation risk is probably has higher tolerance, especially with the cash I'm using. So anyway, that's my thoughts. I think the cryptocurrency thing is Internet 2.0 when it comes to the blockchain. As far as will it be a currency? I don't know, maybe. One last thing on that. In the U.S., everybody needs to understand that when you get a cryptocurrency, it's a pure luxury and it's a pure speculation. People who are buying it in China and Korea and Zimbabwe, they have no choice. There is no alternative. If some of them can buy gold, like I was talking to somebody in India, but it's not easily transferable. They are buying Bitcoin for a whole different reason. When you're sitting here in the West and you're AC and you're buying Bitcoin, you're buying it because you're a gambler. The guys in China and India and all these other countries, they're buying it because they are in desperate need of a currency that the government doesn't control.
Never thought of that angle on it. That's really interesting to me. So, Bitcoin as a lotto play, a very small percentage of one's portfolio. Sounds like you're not against it. I'm not against that either. What about other cryptos? Ethereum, Ripple, Dogecoin, Litecoin. Can we get in on the ground floor, or is it too late, you think?
For sure, it's too late to get into the altcoin boom. Now, you'd have to get into a new one right when Bitcoin will have another big run here in the media, right? So we saw it in 2013, I believe, when it hit 1,200, and then it went away for years, right? Yeah. And then it just came back in the last 3-4 months. So that's when you're going to get the biggest profit. Those are very hard. It's equivalent to pump and dump. If you're going to buy a cryptocurrency, I would recommend only 2, maybe 3, maybe Litecoin, but really Bitcoin is the granddaddy of them all, and that is the one that I buy, and I buy Ethereum. And the reason I buy Ethereum is because one of my biggest hesitations when I first learned of cryptocurrency, because I'm not a techie, I'm not a software guy, was that it wasn't backed by anybody. And I would tell all these people who wanted me to, go really hardcore on Bitcoin, I said, look, if it was Amazon coin or Microsoft coin or Walmart coin, I was like, it would be easy for me to understand and trust and see how the older generation would adopt it. Well, guess what? Ethereum, it's backed to, I know this is not going to be popular with my audience and maybe not yours, but it's backed by Goldman Sachs, JP Morgan, Microsoft. Okay, there it is. I mean, look, the oligarchs have chosen one of these coins. So just like, I'm pretty bloodied up from sometimes betting against the Fed. In this case, why fight it? I'm just going to buy a little Ethereum, not much, and here I've got Bitcoin, which is the decentralized coin, and then I've got Ethereum, which is the oligarch-backed coin. Let's see which one. Again, I am gambling. I am at the freaking roulette table with these things.
Nothing wrong with gambling a little bit in life, as long as you know ahead of time that this is money that you could afford to lose if it went to zero, as you alluded to before. And finally, the dollar, king dollar. I'm looking at the UUP, that's the ETF that I like to trade, chart here, and it is down. It looked like June might be the month that it would go up, but it came crashing right back down. And interestingly, I just recently interviewed Mr. Cliff High, who referenced the idea that the dollar could actually become worthless in our lifetimes, or close to it. What are your thoughts on that?
Well, I think it'll absolutely become worthless in our lifetime. There's no question in my mind. In fact, the currency usually has some sort of reset every 4 decades, which this current reset we're in, or current reboot, was about just over 40 years ago. So you had the just to give people an idea, you've had in the United States, you've had the continental currency, which suffered from hyperinflation and counterfeiting. You've had hundreds of private currencies and state currencies. You've had the greenback, which was a treasury-issued currency in the 1860s that had no debt. It was literally, when they say print money, it was just printing money. That was it from the treasury. Then you had the Federal Reserve note that was gold-backed, where you could actually take gold to a bank, or a currency to a bank and get gold. In the 30s, you had the gold-backed currency that was only exclusive to sovereign nations, sovereign central banks. And then in the 1971, we went to the Federal Reserve note that is backed by nothing, and that's what we're still under. Will it be reset? Absolutely. I don't know if the dollar will go away. Maybe the name is still the same, but it's a new dollar. But the fundamentals for the dollar are horrible, to be perfectly honest with you. It's an old currency at this point. It's an old fiat currency. The debts that belong to the Federal Reserve and the national U.S. debt of who's the lender, the borrower. Has zero chance of paying back its national debt. It has zero chance of paying for its obligations. Illinois what's happening there, that's the United States. And the United States is in a much worse shape than Illinois. So I don't know the timing of the dollar. I'm not a dollar trader, so that's not my expertise. Do I hold a lot of dollars? Yes, because right now that's the currency king. It is the king. Yeah. And here's the thing that most dollar bears don't talk about is if you look at the other fiat currencies, they're in even worse shape. Think about it. If you have a euro, you don't even have an individual country to point to. You basically have a basket, and that's the second most transacted currency. The Chinese renminbi is not liquid to the point that you would need it. The other currencies are extremely volatile. So right now you have basically a bunch of horrible fiat currencies, and the tallest midget in the room is the U.S. dollar.
A dire warning, and I'm glad you're here to tell us. I've spoken to some of the greatest traders and investors in the world, and the consensus is that we cannot be complacent with the currency, with the fiat currency that we have now. And I'm just hearing this call over and over to just, be careful. Be careful. We're always hedging, and I really appreciate your time, and you're letting us know, giving us these warnings that we cannot just sit on our hands. We have to be careful. So I recommend people go to futuremoneytrends.com. Check it out. Mr. Daniel Ameduri has given me so much to think about today. Are you on social media, or how else can people contact you?
Best place to go is futuremoneytrends.com. You can hit the contact us page. I reply to all of them. They'll eventually make it to me, and then I also schedule phone calls with individuals if they have a more in-depth or personalized question they want to ask me. I'm also on Twitter. I know the company has all the social sites, but I look at Twitter or just send an email to futuremoneytrends.com.
That's fantastic, and I can attest that Mr. Ameduri is very personable, and we'll get back to you. And that's the kind of service that I think people are looking for, that personalized service. You're not just giving out trading signals or something like that. You're really there to help people at futuremoneytrends.com. Mr. Daniel Ameduri, an interview that was maybe a little scary, but people need a little scare in their lives right now, I think, to wake people up. Thank you so much for talking with me today. You're welcome back anytime, sir.
Thanks for having me on.
Thank you for watching. Please like, comment, and subscribe. And I'll see you next time.